Welcome to my mortgage calculator tutorial. I'm going to do a quick walkthrough of how to use this simple mortgage calculator, whether you're purchasing a house, renewing, or refinancing. And I'll explain some of the terms and mortgage slang as we go along too. So this will start with the purchase calculator. This will probably be the most popular one. Pretty straightforward, to be quite honest. What's the home price? So if it's $500,000, then what's your down payment? You can always say minimum down payment, or you could try for a 20% down payment, or you could put in your own down payment depending on how much funds you have available. And location matters when we're talking about the land transfer tax and such. You'll see the closing costs just adjusted. I'm actually going to switch this back to Toronto and watch how the closing costs adjust. Okay. It's because Toronto has different land transfer tax rules than the rest of Ontario. Let's go back to North Bay. Okay. You can select your payment frequency. So a lot of people will choose between monthly and biweekly. Now, what a trick here for this calculator is this is still showing you the monthly cost. What you want to look for is the mortgage payment under details. Okay. Then you can also check off if you're a first time home buyer or if this is a newly built home. In this case, let's just say first time home buyer. Let's say we're doing the minimum down, $500,000 purchase price, biweekly payments. Went back to Toronto. Let's go back to North Bay. Average interest rate right now 4.09%, 5-year term. Amortization, we'll leave it at 25 years. If you are a first time home buyer, you could set this to 30 years. But there's an insurance premium, a mortgage default insurance premium. If you'd like to know what mortgage default insurance is, there is an article. I have a full guide on what mortgage default insurance is. For now, let's just keep it at 25 years. There are more options to pay off your mortgage faster to account for home expenses. I strongly suggest if you have a listing for a home ready, up and ready, punch in most, if not all, listings in Ontario will display the annual property taxes. Throw that in there, okay? Just to give yourself a sense. So now you see that the total monthly cost is adding in some of the home expenses. It's going to give you a sense for the full cost of this mortgage. I would also suggest throwing in maybe $100 a month for insurance and $100 a month for heat and hydro. When I calculate your mortgage, when I'm running your debt to income ratio, I have to calculate the property taxes and the heat. That $100 for heat is an industry standard. It's a stand-in, never changes in our calculations. Doesn't matter what the actual heat costs are. We do need to see, at least on the MLS sheet, what the annual property taxes are. That changes for every file. I put those two pieces into your debt to income ratio. Those are debts, monthly debts in your debt to income ratio. Other expenses such as property tax or property insurance, not required in your debt to income ratio, but it is still an actual cost for you. So I highly recommend at least throwing that in there to see what the month to month expenses of owning this house are going to be for you. Okay. So let's recap a little bit. I'm speeding ahead here. We have the home price, the location, the payment frequency, the down payment, if you're a first time home buyer or not. If you're wondering what rate you should put in, send me an email or schedule a time to talk to me or text me. I will give you a range and it will always be an average. As a mortgage agent, I have access to rate promotions. So Even though certain lenders advertise specific rates, we will have two or three promotions at any given time from different lenders. They may work for you, they may not. It's my job to help figure that out for you. So put in your average interest rate for that term, the amortization, so the life of the mortgage. How many years is this? How many years will it take you to pay off this mortgage? And then general home expenses. Okay, so let's look at the results so far. Total monthly cost is 3237 in this case, in this scenario. Again, this is not what your specific mortgage will look like. It's going to be different based on your property taxes, and your financial situation. So just take this entire video as a general guide to running numbers as you're looking at houses. If you want the bi-weekly, if you don't want the monthly mortgage cost, but you want the bi-weekly mortgage cost, you want to see what's coming out of your bank account every 2 weeks, under details, you have your mortgage payment, and there it is. So that's $1,209.38 every 2 weeks. And then monthly expenses of 516.67 if you're putting the property taxes and heat expense in there. Also, other expenses, we're using that for a stand-in for fire insurance or home insurance. Those two terms are used back and forth. Let's look at some of the details that's breaking down here. So, net mortgage. It's a $500,000 purchase price. You're putting $25,000 down. Net mortgage, $427,000. However, here's where the mortgage insurance comes in. In Canada, we have to put 20% down on every home purchase. However, the government allows us to put less than 20% down to a minimum of 5% if and only if the lender purchases mortgage default insurance. This is Canada Mortgage and Housing Corporation, or CMHC, Sagen, or Canada Guarantee. They are the three mortgage default insurance companies in Canada. It is a percentage of your purchase price of your mortgage. That is, in this case, $19,000. The lender will never pay this on their own. The lender always forwards that cost onto you. Now, they're not going to make you pay $19,000 out of pocket. They will wrap that into your mortgage. And then there is, because it's an insurance premium technically, there is a provincial sales tax on that premium. That is an out-of-pocket expense on closing day. So if when you're calculating how much funds you have available for down payment and closing costs, make sure you have something ready for the sales tax on mortgage insurance. That's really easy to calculate. I can help you out with that anytime. Obviously, this calculator does it for you as well. Land transfer tax is another important one. As a first-time home buyer, you receive a $4,000 rebate on this land transfer tax. Let's unclick first-time home buyer and see what happens to that land transfer tax figure. Okay, see it increased by $4,000. And again, this land transfer tax depends on the amount of the purchase price. It's a percentage of the purchase price. So in this case, your closing costs are the provincial sales tax on the insurance premium, the default insurance premium, the land transfer tax, also legal fees. When I'm running calculations for my customers, for my clients, I always run about $2,500, estimate $2,500 in legal fees. I don't know what they're actually going to be. Could be more, could be less. I always estimate $2,500 because I've seen less, I've seen higher. That's usually about the middle. So in this case, let's say the closing costs are $4,000. You need about $6,500 ready above and beyond the $25,000 for the down payment in closing costs. If there is an appraisal, that is an out-of-pocket expense up front for you. Even if the lender says is requiring the appraisal, it is your expense. Home inspection, an out-of-pocket cost for yourself. And then obviously moving costs and such. Lender fees and broker fees are generally not a thing if you are purchasing with less than 20% down. The when you if you have a credit score of more than 600, 650, if you qualify for these insured mortgages where you can put less than 20% down, there's no lender fee. Lender and broker fees only show up if we have to go to an alternative lender or private lender. And in my case, the way I do business, I'm always going to warn you of any additional fees before you sign anything. And I'm going to make sure that you are fully aware of the costs before you step into any mortgage. So this gives you an idea. Let's say you find a listing you really like. You want to know if you can afford it. You want to know what the costs are going to be. You throw the price in here, you throw your location in here, the down payment, whether or not you're a first time home buyer, the interest rate, the term you're hoping for. And again, you can choose all sorts of terms. I would recommend sticking to 3 or 5 years. Those are the two generally cheapest fixed fixed terms, fixed interest rate terms. There, right now, things are weird with interest rates. Sometimes the 3 year, every now and then, could be cheaper or as much as the 5 year, but generally the 5 year is the cheapest. You could also choose a variable. This is a little tougher because often lenders express variable interest rate in terms of a discount or a premium to their prime rate. Right now, most lenders have a prime rate of 4.7%. That's, October 2025. That could be very different when you're actually seeing this video. So it's important to know what the prime rate's going to be at that point. And then you got to know what the discount, usually it's a discount, what the discount to prime is. It's going to be comparable, not always though. For a long time, variable rates were cheaper than fixed rates for the last since 2022 when interest rates skyrocketed. They peaked, early 2020 or late 2024. They started to come down. So still the variable is more expensive now than the fixed. That is historically uncommon. But we don't know where we're going from here. It feels like rates should keep coming, those variable rates should keep coming down, but we have no idea. Your amortization, and you can play around with these amortization numbers to see how they affect your mortgage. Something interesting to point out here. Okay, let's go to our mortgage amount. Okay, and keeping everything the same, we'll go back to the fixed. So here's our 30-year mortgage insurance premium at 19,950. If we go back to 25 years, it's just $19,000. A 30-year amortization only available for uninsured mortgages for first-time homebuyers. There is a mortgage default insurance premium. You can have access to a 30-year amortization if you put 20% or more down on that purchase. And it punches out all of your costs, right? Your biweekly mortgage payment. You could also see what an accelerated biweekly mortgage payment would look like. So in this case, that's 1311.35, about $100 more. And what the accelerated biweekly payment does is, so with a biweekly payment, you make 26 payments a year. There are 52 weeks in a year. If you're making one payment every 2 weeks, that's 26 payments a year. What a accelerated biweekly payment does is it takes the total amount of mortgage payments you would make in a 12-month period, okay? And instead of dividing that by 26, they divide it by 24. So it's a little larger, meaning you're paying more directly off the principal. The accelerated biweekly payment, or accelerated weekly payment for that matter, but if it's accelerated, some lenders call it something different. Rapid is a term I've heard used before as well. Scotia actually only does accelerated payments. They don't even give you the option, strictly accelerated payments. If you choose biweekly or weekly, there's no such thing as an accelerated monthly payment. That's what pays your mortgage off faster. Just because you're choosing between monthly and biweekly barely affects the actual length of your mortgage. What really affects, what really allows you to pay your mortgage down faster is an accelerated payment. Okay. And you can mess around with those numbers and see what it does for you. A fun thing to do here is mess around with prepayment options, so pay your mortgage faster. So if you increased your payment by, let's say, 10% permanently, it shows you your interest savings and how fast you're going to pay off your mortgage. Nice little graph here for the visual as well. Let's put that back to zero. Let's say you make annually, let's say you're able to put $5,000, and these prepayments come directly off your principal. This kind of prepayment reduces, if you were to pay off $5,000 annually on what we chose, 25 year, yeah, on a 25-year amortization, you would pay off your mortgage 7 years and 4 months faster. So this tool is really good to show you how much these prepayments can affect you. There's a lot here. You can also download the report, get this all in a PDF. That's the purchase calculator. The mortgage calculator is very similar, except it eliminates the purchase element of it. So if you are renewing or if you are refinancing, it's just the strict mortgage calculator that you would want to use because it avoids having to put in the down payment and such, and just go straight to the mortgage amount. Okay, so with the purchase calculator, we're starting with the home price. With the mortgage calculator, we are going right to the mortgage amount. So if you had a $5,000, let's see, balance at the end of term, so $388,000. Let's say you're coming up for renewal. Okay, you want to know what your biweekly payments are going to be. Let's say the interest rates are 3.9% in 5 years. 5 year. And at this point, you have to make sure that you adjust for this as well. 20 years. This is really important, okay? Because you've been paying off your mortgage for 5 years. Your amortization is now only 20 years. If we forget to put that in, it's going to look a lot lower. So right now the bi-weekly payment is 932, but that's not real. Your actual amortization is 20 years. So your biweekly payment is 1072. Okay, so it's a really quick way to calculate. And you can still, pay your mortgage off faster. It doesn't have the options for monthly expenses because you already generally have that information. You're not looking ahead. You really just want to see what the mortgage calculation is going to be. That is how you use this mortgage calculator. If you have any questions, please reach out. You can email or call me. If you can always download the report and we can go over it together. And if you have a home that you're hoping to make an offer on, you can always send me the realtor.ca link, and then we can call and go over it together. And I'd be happy to explain all of these numbers to you. Thank you so much for watching. I hope that you found this useful, and I hope that you're able to use this mortgage calculator to your heart's content for whatever you need.